Hello everyone and welcome to my YouTube channel where I teach lessons of economics useful for students of class 11th and 12th. And this is once again a continuation of the chapter National Income and Related Aggregates. You can check out my YouTube channel where I have uploaded videos related to this chapter. The first one was on basic terms. The next video was on the topic circular flow of income. The third video was on the basics of national income. And the next three videos were on a value added method. In this video, we are going to learn something about the expenditure method of measuring national income in an economy. So first of all, we should understand that the expenditure method is not from a producer's point of view. That is already discussed in the value added method. If you remember the value added method, you can check out my YouTube video. And there I have taught that in the value added method, when we are calculating national income, we are calculating the value added by each and every producer in an economy. Every single seller creates goods and services, and that value created by the sellers, that value created by the producers is added totally in the value added method. But in the expenditure method, we are calculating it from a different point of view, that is from the demand point of view. And what do I mean by that? I'll try to explain it once again with the example of the farmer and the baker. Just to revise what I taught you about the farmer and the baker, in the total value added method, the farmer produces 100 rupees worth of wheat, and out of that 50 rupees worth of wheat is being sold to the baker. This baker creates from that 50 rupees worth of wheat 200 rupees worth of bread. And so the farmer has added 100 rupees worth of value to the economy. The baker added 200, but 50 rupees is the intermediate goods or raw materials. That's why the total value added by the baker is 150. And so the value added by the farmer and the baker combined is 250 rupees. Whereas when we speak from the expenditure method, we have to find out what is the expenditure made on the farmer and the expenditure made on the baker. The farmer created 100 rupees worth of wheat, but somebody, that is the baker, is the one who has spent 50 rupees on the farmer's wheat. So the expenditure made on the farmer is 50 rupees, and some consumer has consumed 200 rupees worth of bread, which means the expenditure made on the baker is 200 rupees. And so if you combine the expenditure made on the farmer and on the baker, we have 250 rupees of expenditure made on the farmer and the baker. So basically, when we calculate national income, we can calculate either from the producer's view or from the consumer's view. And so the expenditure method will not focus on the producer, it will focus on the consumer. So what is expenditure method? From the previous example, it is very easy to understand that the expenditure method measures the national income on the basis of expenditure made on all sectors of the economy on the final goods and services in a given year. Which means so many different kinds of people spend money, and we are calculating the total spending or the total expenditure made on all sectors of the economy. We have the household sector, we have the firms, we have the business sector, the government sector, and then the foreign sector. So all spending made on all four sectors which are producing goods and services in a given year, that is called as the expenditure method. We'll try to understand expenditure method in a simple way. So as I told you, there are four sectors in the economy, that is household, firms, that is business. Then we have the government sector, and then we have the foreign sector. And so the expenditure made by the households on the consumption of goods and services will be calculated in this method. The expenditure made by business or firms on investment or on final goods will be also included in this method. Whatever the government spends on consumption as well as provision of goods and services, that will be considered in this method. And finally, whatever we export will be added, and whatever we import will be reduced in the expenditure method. So all the consumption made by the household or the expenditure made on the consumption of goods and services by the household sector will give a simple formula, and the formula is basically a capital letter C. For the firms, since we are going to use investments as the main topic here, all expenditure made on investments or consumption of final goods will be considered as capital letter I by the firm sector. All the spending or the expenditure made by the government on consumption of goods and services will be denoted by the capital letter G, and all the exports will be X, and the imports which are supposed to be minused or reduced or subtracted will be denoted by the letter M. So, how can we synthesize the entire formula? Once again, the private final household consumption expenditure or households will be considered with capital letter C. The final investment expenditure made by firms, which is also called as gross domestic capital formation, will be denoted by the capital letter I. The government final consumption expenditure will be denoted by the capital letter G. The revenue from exports will be denoted by the capital letter X. And from that we have to subtract the payments made for imports by the economy, that will be denoted by minus M. So when we add all these aspects of the formula together, we get this formula C plus I plus G plus X minus M, and that is going to be GDP at market price, or the gross domestic product, which is calculated at current market prices. Why is it market price? Because if you see, all the spending done is done not at the original price, but at what price at which it is being sold in the market. Whenever we spend something, we spend not only on the original value, but also it includes taxes, it includes subsidies, and also the profit of the seller. And so the GDP calculated under the expenditure method will be at market prices, the current market prices. So once again, the formula is C plus I plus G plus X minus M, and that will be equal to GDP at market price. Whenever we are calculating national income using the expenditure method, we have to have certain precautions, and the precautions are there on your screen right now. The first one is that only final expenditure has to be taken into account, which means all expenditure done only once should be taken care on the final goods and services. The expenditure or the spending made on the consumption of final or complete goods and services, only that will be taken into account. And this rule is there because we should avoid double counting. If we take raw materials into consideration, sometimes there will be raw materials in 1 year and will be converted into finished products in the other year, which means we will be counting that amount twice. So in order to avoid that mistake, we will be taking into account only the spending made on final goods and services. Once again, to recap, what is final goods and services? The process of production which is complete, only those goods and services will be considered as final goods and services, and the expenditure made on them will be called as final expenditure. The second point is that expenditure on second-hand goods will not be included. Once again, the reason is given there to avoid double counting. Already a person has spent on purchasing it first hand, that is being resold second hand, and so that value is being counted twice. So therefore, only the first hand expenditure on the final goods and services will be considered. Second hand goods expenditure will not be considered. The third rule is that transfer payments will not be included. Now, transfer payments, you can recap the first video where I explained about the basic terms. All that unearned income, for example, lotteries, scholarships, these will not be considered in the expenditure method because these are unearned income. Only those income which are pertaining to the production of goods and services, only those kinds of income, only those kinds of spending will be considered. The next rule is that self-consumption must be included. Whatever is produced by you and consumed by yourself has to be included, because you are creating a value, and also even though you're not spending on it, you are consuming the value of that product, that goods or that services. And therefore, since any monetary value is created in the economy, that has to be considered in the expenditure method. And finally, shares and bonds should not be included. This is because shares and bonds do not produce any kind of goods or services. They are basically derivative values or value which has been derived or derived because of its buying and selling in the market. Shares and stocks do not produce goods and services. They are just increase or decrease in the market price of that particular product, and therefore shares and bonds should not be included in the expenditure method. So what should be included in the expenditure method? It's just C plus I plus G plus X minus M. Now we will try to calculate national income using the expenditure method using the formula which I taught you just now. So we have certain information given there. We have private final consumption expenditure at 1,50,000 crore rupees. We have government final consumption expenditure at 1,15,000 crore rupees. We have gross fixed capital formation, that is 1,10,000 crore rupees. We have exports at 15,000 crore rupees and imports at 17,000 crore rupees. With this information, we are supposed to calculate GDP. And as I told you earlier, whenever we are adding all these things, we will get GDP at market price. So let's see how are we going to solve the problem. All we have to do is use this particular information and present it neatly in the formula. So the first step is to identify what sentence is what letter. Private final consumption expenditure, that is 1,50,000 rupees, will be considered as household consumption, and that is why it is denoted by the capital letter C. And therefore under C I will be writing it as 1,50,000. Government final consumption expenditure, very easy to understand, 1,15,000 crore rupees will be coming under the capital letter G. We have gross fixed capital formation. It is a fancy term just for investments. Any investments made by a business sector will be called also as gross fixed capital formation, that is 1,10,000 crore rupees, and that will be coming under the capital letter I. Then you have exports, very easy to understand, that is 15,000 crore, that will be coming under X. And then you have imports, that is 17,000 crore rupees, that will be coming under minus M. And so if you use your mathematical skills, you have 1,50,000 C plus 1,10,000 I plus 1,15,000 G plus 15,000 X minus 17,000 M. You will be getting 3,73,000 crore rupees. So this is a very easy way of solving problems related to expenditure method. You have to first identify what is C, I, G, X minus M, and then neatly arrange it in the formula, and then you will get your clear GDP at market price. This is a very useful way, a very clear-cut way of solving problems under the expenditure method. We will solve another problem. So we have another problem here from the information given below. Calculate GDP. We have private consumption expenditure, that is 2,980 crore rupees. We have government consumption expenditure at 360 crore rupees. We have gross domestic capital formation at 520 crore rupees. And then exports at 200 crore and imports at 220 crore rupees. How are we going to solve? Exactly in the previous way. The first one is private consumption expenditure, which will be capital letter C, that is 2,980 crore rupees. That will be here. Then we have government consumption expenditure, that is 360 crore, that will be coming here. Then we have the gross domestic capital formation. Once again, as I told you, it's a fancy term for I, and so that is here. Then we have exports at 200 crores and imports at 220 crores. So by using our mathematical skills, we have C, that is 2,980 crores, plus I, 520 crores, plus G, 360 crores, plus X, 200 crores, minus M, 220 crores. We will be getting GDP at market price, that is at 3,840 crore rupees. I hope it will be very, very easy for you to understand how to calculate national income using the expenditure method. Now we have to take the expenditure method forward. What I introduced you was just the first layer of the formula. The entire formula is as follows. We have the first, that is C plus I plus G plus X minus M. This is the first line of the formula. C plus I plus G plus X minus M. C is private consumption, I is investments, G is government consumption, X is exports, M is imports. When you consider this formula and when you do the calculations, you get gross domestic product at market price, or GDP at MP. From this, If you reduce depreciation, you will get NDP at MP. Anything gross minus depreciation is net, so you have net domestic product at market price. From this, when you reduce net indirect taxes or also minus indirect taxes plus subsidies, you will be getting net domestic product at factor cost. NDP at MP will become NDP at FC. From this, when you add net factor income from abroad, that is the exports or revenues from, and then minus the revenues to foreign sector, you will be getting net national product at factor cost or NNP at FC, which is also called as national income. This is basically copying from the previous method, that is the value added method. So only the first line of the entire formula changes and the rest will remain exactly the same. We will now try to solve certain numerical problems as we have discussed about the formula. I hope you can recognize and remind yourself about the formula and memorize it, because this will be very, very helpful. But don't worry if you don't remember, I will guide you through various steps. So now we have this small problem here. Calculate national income from the information given below. We have gross domestic capital formation at 10,000 crore rupees. We have inventory investments, that is 5,000 crore rupees, depreciation at 2,000 crore rupees, indirect taxes at 1,000 crore rupees, subsidies at 2,500 crore rupees, private consumption expenditure at 20,000 crore rupees, and net factor income from abroad, and that is at minus 600 crore rupees. Using this information, we will try to solve the problem. As we have the solution before us, we will go step by step. The first thing is we have to identify C plus I plus G plus X minus M. So C is private consumption expenditure at 20,000 crore rupees. That is what I'm going to write here. Then we have I. Now there are two aspects in this problem which are related to I. First one is gross domestic capital formation, as I have discussed in the previous problems, that is 10,000 crore will be I. At the same time, inventory investments, that is 5,000 crore, will also come under I. So we have C plus I. There are no aspects regarding to government consumption. There are no exports and there are no imports. So therefore, we only have C plus I, that is 20,000 plus 10,000, 30 plus 5, 35. And when we add this, it becomes GDP at market price, that is 35,000. The next step in the formula is GDP at market price minus depreciation. Depreciation is given there in the problem, that is 2,000 crore, and we have 2,000 crore here. When we reduce that, 35 minus 2 is 33,000. We get net domestic product at market price. Anything gross minus depreciation will become net. So GDP at MP minus depreciation will become NDP at MP. The next step is minus net indirect taxes. As I explained in the previous slide, we have minus indirect taxes plus subsidies as the formula. So we'll search minus indirect taxes, that is 1,000 crore rupees. We can write it here neatly. And then we have subsidies at 2,500 crore rupees, which will be added here. So we have 33,000 minus indirect taxes, the 1,000, that is 32,000, plus subsidies 2,500 is 34,500, and that is going to be net domestic product at factor cost, where we are from the market price removing the values of taxes and subsidies to get the original price of the goods and services produced. So that is net domestic product at factor cost, that is 34,500 crore rupees. From that, we are moving into the final step, that is net factor income from abroad, and this amount is at minus 600 crore. We are going to neatly write here. So 34,500 plus minus 600 crore, so this is basically minus. We will be getting 33,900 crore rupees, and this amount is net national product at factor cost, or also called as national income. If you see the problem, there is no value left unused. All the values have been appropriated neatly into this formula, and if you write this, you will be getting 6 full marks in your exam. We will move to one more problem where you will get a very clear idea of how to solve. If you can solve it faster than me, I will be really happy. So the problem is there on your screen. Net exports at 300 crore rupees, minus 300 crore rupees. Gross domestic capital formation at 20,000 crore rupees. Government final expenditure at 1,18,000 crore rupees. Private final consumption expenditure at 2,50,000 crore rupees. capital consumption at 2,500 crore rupees, net indirect taxes at 360 crore rupees, and net factor income from abroad at 13,000 crore rupees. Do not worry about the information. All you have to do is remember the formula, identify what amount is what part of the formula, and then it will be very, very easy to solve the problem. So we will begin with the first one, that is C. So the first one is C, private final consumption expenditure at 2,50,000. We will neatly write this here, 2,50,000. Then we have to search for I, that is gross domestic capital formation, which is at 20,000 crore rupees. That will be coming under I. Then we'll be searching for government final expenditure, that is here at 1,18,000. That is clearly written here. Then we have exports minus imports. And so exports minus imports, it's already written here as net exports. Okay, it is already given here as net exports, which actually means exports minus imports, and that amount is already given here at minus 300 crore, which means the imports are greater, and so it will be coming here at minus 300. So we have 2,50,000 plus 20,000 plus 1,18,000 minus 300 coming at 3,87,700. This is gross domestic product at market price. The next step is minus depreciation, but if you see in this problem, it is written as capital consumption. Capital consumption, if you can refer the first video, depreciation is also called as capital consumption. That's at 2,500 crore rupees, and that value will be written here. When you reduce depreciation from GDP at MP, anything gross minus depreciation is net. So you have NDP at MP, that is at 3,85,200, because we have reduced 2,500 from 3,87,700. Now from this we are going to the next step, that is net indirect taxes, and to our good luck it is directly given as net indirect taxes in the problem at 360 crore rupees. That we will be writing directly here. So from this amount of 3,85,200, we are going to reduce 360. The amount is going to be 3,84,840. And the final step is net factor income from abroad, that is 13,000 crore rupees, and that we are going to write here, and we are going to add it. So 3,84,840 plus 13,000 is going to be 3,97,840 crore rupees, which is also called as net national product at factor cost or national income. And as you can see, all the aspects of the problem have been attended to. No amount has been left unused or unattended. And very neatly, we have used the formula, and according to the formula, we have prepared our national income using the expenditure method. With that, we come to the end of this video. Once again, a recap of all the videos which I have uploaded on YouTube. The first one is on basic terms, the second on circular flow of income, the third on basics of national income. The next three videos were on value added method, and in this video we discussed totally about expenditure method. Stay tuned in my channel to learn more about the income method. This is the third method to calculate national income. Thank you so much for staying tuned till now. If you found this video very, very helpful, please do not forget to share it with your classmates so that they too can benefit from it. Thank you so much. Stay educated and stay safe.